Welcome to a Traders Foundation Group market analysis video. We're going to go ahead and talk about gold as well as dollar, and we're just going to mainly cover the fundamental points since it is the end of the quarter. We're just going to do a quick fundamental review, and then we're also going to mark out some zones here from a technical perspective. And then to end the video, we'll go ahead and talk about this upcoming NFP and what we can expect from that specific report. So rather than starting from scratch, I'm just going to go ahead and use this cheat code right here, which is basically from this morning's live session that I did with my community. We already did a whole fundamental rundown and review. So let's just go ahead and take a look at some of these points that we talked about here. So when we're looking at gold from a fundamental perspective first, and we see that gold on the quarterly chart, if you were to just quickly take a look at that, you can see that it's a very, very strong bullish candle. And if you were to look at dollar, you see that it's pretty much vice versa, right? You've had a lot of weakness coming into the dollar, a lot more strength coming inside of gold. So now when we ask ourselves that question again, back to the fundamentals, this has the main driving factor, the main driver of price for the past couple of weeks and even months has been the fact that the Fed is more on the dovish side now. There's not really talking about keeping rates where they're at. Now they've actually done the rate cuts, and the tone is very well set that they are going to be doing more rate cuts at the end of by the next two meetings of the FOMC. We don't know how large the rate cuts are going to be, but the point is they are going to be doing those rate cuts, right? So the rate cut narrative, that's been driving the price of gold. The other thing that has also helped gold maintain that safe haven appeal has been those increase in like tensions with Israel and Hamas kind of fighting in Lebanon, a lot of more geopolitical tensions coming in. And again, that just brings a lot of uncertainty to the world. So gold is used as a safe haven. And of course, this is why we see that basically translating in front of our eyes as a very, very strong monthly candles. If we look at this on the daily, from any single time frame that you look at gold, you know that gold is bullish until you start diving onto the intraday time frames, which we're going to talk about in just a second, right? Because remember, just because fundamentals are just bullish doesn't mean that the price of gold or whatever asset class you may be trading is going to just go up regardless of the technicals, right? Now, those are the main talking points, right? Like I just mentioned, the rate cuts, Middle East tensions. It's also the fact that the economic data that we've had has also helped the Fed go ahead and give them that green light to do the rate cuts, like inflation coming down, labor market is weakening, so they don't want it to weaken too much, right? To kind of avoid a recession from coming. So how do they defend themselves? By doing those rate cuts. And again, they are planning on doing more, but it's all depending on the incoming data. So today we had a Powell speech, right? And to put it into simple terms, what did Powell mainly talk about that he hasn't talked about before? To be honest, he basically said the same exact things. The Fed is still very much data dependent. What was interesting about Powell is that he did pretty much repeat the same information, saying that they are going to do those rate cuts, and they are going to go ahead and look to do at least 25 basis point rate cuts in both of the meetings that are about to come. And the only thing that can change that, this is the important piece of information that I got from the Powell speech, is that if the data suggests that they may need to do a much larger rate cut than what the markets are expecting, which again is 25 basis points, then that's what's going to be that key driving factor for us traders to be able to use that information to our advantage, right? So basically that means that for NFP, the upcoming NFP, without even going too deep into it right now, because again, I'm going to do a quick review just by the end of this video, we already know that the Fed says, look, if you see that the labor market is weakening way more than what the markets are expecting, the economists are expecting, then you are going to be able to expect the Fed to actually go ahead and do that 50 basis point rate cut, which again, it's only going to help push this narrative of the rate cut narrative going much further with that information. So in turn, we could see just continued dollar weakness, and we'll most likely see continued gold upside. But again, that's for NFP and later on this week, right? So you can take a screenshot of this, you can take a look at this, and of course, reach out to me if you have any questions. Let's go ahead and actually look at the technicals here. And then that way, once we're done with writing up a few zones here, we can kind of talk about the previous NFP and how we can prepare for this upcoming one, right? Because I have all that information here right inside. Let's just look at for it really fast. So yeah, so this was the previous NFP session. Again, we'll take a look at this in just a second. Let's go ahead and mark off a few zones on gold. So again, you can see it very clearly from the technical and the price action that gold is very much bullish, right? But we have peaked into new all-time highs, and we are now starting to get a little bit of pushback here from sellers, right? We're starting to get a little bit of strength coming into the markets, more on the seller side, right? Like when we start to look at the intraday time frames, you see price peaking into these highs and then failing to continue any higher, and now it's starting to create this sort of bearish market structure here on the intraday time frames, like lower lows, lower highs, lower lows. Again, let's go over that. So let's go here first on the daily. I'm gonna mark off, actually I'm gonna take a look at this on the 4-hour. I'm gonna take a look at this on the 4-hour. You can see that we do have some clear reactions around this area, kind of like a resistance in the past over here. Once it broke above here and finally maintained above that, it did create this support, and we do have some rejection wicks at the moment. Around this area, it does seem like we do have some resistance as well. Like we have basically price getting to this area, showing a slight pause. So some reactions we have there, and the same with the previous here. And so let's take a look at this on the 1-hour. Maybe we can take a look at this a little bit more clear. Yeah, I want to go ahead and move and adjust this zone just a little bit higher, because I would want to use this zone around this area right here, where basically price showed some market, it's showing market reactions at the moment. You can see in the past you do have, whether you want to just place it around this general zone, kind of like where price is now starting to break above. Again, you do have basically price giving you that support here and reactions, as well as confirming you that you do have some sort of like a slight resistance, right? So I don't want to completely ignore that, and then I want to use this level here, as we can see the main reactions, like reactions off of this wick and reactions off of all of these bodies over here, like supports. You have resistance, so this one's clear. This is the only zone that's a little bit just kind of in the middle of the range, but again, for the information that we have right now, just kind of, you want to just leave it around that 4-hour zone. You have the new 4-hour candle closing in the next 40 minutes. Of course, it'll be most likely, we'll adjust this as price action flows, right? But I'll just leave it there for now, so that way I can understand how the markets are trying to paint this picture for me. And then last but not least, I'm gonna just mark off this resistance around here on the 1-hour, which lines up with this previous support, right? So now we have our technicals. We again rewind the video if you want to see the fundamental review, so you can understand what has been pushing price towards the upside. But again, before I dive into like the NFP and we talk about that, let's not be blind to the fact that, okay, yes, those fundamentals may have been very bullish and they did push price towards these all-time highs multiple times, right? But price, again, now look, after, you know, I created this structure point for us here, price is failing to continue towards the upside, and now you're starting to create this sort of structure. So you can see you're breaking below that structure point. You're now retesting, or excuse me, you're now creating new, for example, lower high price points here. You're creating new lows, minor high, and then you did create that new low there, right? So we do have these structure points to look out for. And so personally, because of the fact, again, before diving into like NFP and that review, because of the fact that price of gold has been so bullish, and that information is most likely already well adjusted to the markets, I would preferably follow this price action that we have going on here, which means look out for continued sells as long as price is going to maintain below this 2643 area. And then if it can continue to trade below that zone that we just marked up, which again, it's not the most decent zone, but it's still a zone that we can use to our advantage, I would look out for continued sells down into this support, just following clearly, as we can see. Again, let me just point it out one more time so that way people can see it, and just respecting that structure overall. So again, that would be the idea, right? If price can get up into this area and give us rejections, as well as continue to trade below here. And also, let's say, for example, you do have price trading below this area, doesn't even get up into these highs. If we can get price to close below this 2624 area, kind of breaking below this support over here, then we can just expect for continued sells, at least short term, until price starts to show some exhaustion on those intraday time frames. And then overall, that bullish narrative from the fundamentals, you know, comes back into play. And then we can continue to look out for more macro bulls here on gold. Now, the other idea, in case that, let's say, for example, because we do have still those fundamentals at play, if we have from a technical just looking at price action, if price is going to be breaking above this resistance and trading above that resistance, then I would just look out for continued buys, at least up into like these areas over here, and then just kind of take it zone by zone without having to overcomplicate too much. So now to end the video, let's go quickly and do a review of the previous NFP. And then of course, we'll talk about a little bit about this NFP, so that way we can be prepared for that. So in the previous NFP, let's just quickly read over this so that way we can understand what it was that we had going on during that day. And of course, this was a session that was recorded inside of our group. So during this session, we waited for NFP to be released to use that information to our advantage. From a technical perspective, gold was more on the bullish side, but after seeing the data coming out neutral, slight and slash optimistic, excuse me, we decided to watch for rejections near the all-time highs and take sells below 25.20. As you can see, this is around 25.20. This is the area right here. We decided to, again, look out for rejections off of this area, but because price action was so bullish at that moment and it did spike pretty aggressively towards the upside, rather than trying to guess whether price was going to create this top, we can say, I decided, at least for me personally, and what I gave, like the advice that I gave to my community, was that it was going to be a lot better for us to be selling the gold once it can get below that 25.20, because at that point you would have multiple confirmations from a technical perspective and a fundamental perspective. The fundamentals were basically telling us that, again, this NFP and unemployment rate, again, it came out more on the neutral and kind of like optimistic side. But it was these earnings over here that did come out very much optimistic, as you can see, kind of 0.4% and 3.8%, both beating the consensus and the forecast. So that's that piece of information that I personally was mainly focusing on. And so that's where I got the idea to look out for those sells. And again, I can always, of course, maybe show you guys how it was that I took advantage of that specific trade, maybe on a different trade. So that way you guys can see that for yourselves, how you can actually take trades with this economic data. So again, we can see it very clearly how price reacted this day. You did have some pretty clean sell-offs. So we did read that data very much on point. So let's go back to the markets here and let's pull up this NFP report, right? So again, with the fundamental information that we have and with seeing that previous NFP report, what can we expect from this report, right? So kind of like the same exact thing as we did in the previous report. We're going to be looking for pessimistic data, or we're going to be looking for optimistic data. In this case, if we wanted to see gold, let's say, for example, continue to trade towards the upside, what are we going to want to see? What we're going to want to see most likely will be an increase in unemployment rate, because kind of like going back to that fundamental review that you saw in the beginning of the video, if you see that unemployment rate is going up, again, that's going to push the Fed into doing more aggressive rate cuts. If the Fed is going to be doing more aggressive rate cuts, then the markets are going to start to adjust to that information. And so gold in turn is going to turn more bullish. And again, we'll be able to confirm that by taking a look at the dollar and by taking a look at gold during the data release itself. If we see, for example, the NFP report coming out below the consensus and below the forecast, along with that unemployment rate going up, again, that's going to be one-sided information for us to be able to understand that most likely that labor market in the US is suffering like the Fed warned against. And so if we do see that piece of information, again, NFP coming out lower, unemployment rate coming out higher, if we see the hourly earnings also coming out below the market expectations of 0.2% or below 3.7%, it's all going to be basically one-sided information. That's going to fall more on the pessimistic side for the US. So again, just by understanding that basic macro knowledge, you'll be able to understand, okay, with this piece of information, we may understand that from a macro perspective, right, in the long term, and even during that specific day, you will see most likely dollar turn more bearish and you will see gold turning more bullish, right? And we have plenty of NFP data reports that we've seen before, and we've basically approached it in this same exact way, right? Now, if you guys want to reach out and if you have any questions, of course, just check the link in the description. You'll be able to see, like, for example, my Instagram or my Discord group, where we, of course, are breaking these things down on a day-to-day basis during our lives. So other than that, I will see you guys in the next video, and take care.